Good morning, everybody. Hey, welcome to Tuesday, June 28th. A couple days left in this quarter. As we wind it down, we've got some economic news coming out, more tomorrow and Thursday. Not a lot happening today. We did end up in the red yesterday. We'll talk about that and more when Scotty joins us here in just a minute. But before we do that, remember that there's a lot of things in this world that you and I cannot control, but there are certain things within your portfolio that you have control of. And one of them is how much risk you have. But the question is, do you know what that number is? Do you know what that number should be? If not, give us a call at 863-382-0037 to schedule your core retirement design. Hey, with that, we've got Scotty coming up next.
Highlands Light FM. I'm on the edge with you. Hey, I can think of worse things. It's 8:38. Phillip's on the line. Let's head to Statler Financial Services. Ian Sebring, how are you on this fine Tuesday morning, Phillip?
Hey, doing well today, Scotty. I hope you are too. And, yesterday, I think we should probably start out there because when you and I talked, it was slightly green yesterday morning.
Right.
Unfortunately, we just could not quite hold on to everything throughout the day. So we ended up down slightly on most everything. The S&P 500 was down about 0.33%, down $11.63 to 3,900. The Dow Jones 30 was down 0.2. It closed at 31,438. NASDAQ was the biggest loser yesterday, down almost 0.75%, closed at 11,525. So, hey, we went from green to red yesterday, and hopefully we can reverse that trend today and end up green for today. Would be a nice change of pace, but yet to see how that's going to work out.
Right.
We've got on the yesterday we talked about there was pending home sales was coming out after you and I spoke yesterday about 10 o'clock, and it did. And it was surprisingly good. Pending home sales index actually rose 0.7% versus an expectations of being actually down 0.4%. So, or down 4%. So that was a pretty big swing there, and some good news for home sales. Interesting though, I was reading another article that was predicting the real estate slowdown based on shipping data from China, Scotty.
Really? Okay.
Yeah, I thought that was kind of interesting that they're seeing a slowdown in things like construction materials, lumber orders are down, things like appliances are those items are kind of slowing down. Home decorations coming from China and Vietnam. There's less of those things on the boats coming over right now. So they're basically thinking that that's predicting a even bigger slowdown in the real estate market. So I found that kind of interesting in this article. It did say, though, that the things like apparel, footwear, sporting goods remain high. I guess because the summer's here and people are using those things as well as like back to school. Retailers are having to order clothing and stuff now for the back to school season, so it gets here in time. So an indication there that those things still look good for the rest of this year. So I thought that was kind of a little interesting article. Today we don't have much in the way of economic news of anything that's of good nature. We've got a Case-Shiller home price index comes out a little later, as well as a consumer confidence index comes out at 10. Those two things will give us some indication of economic conditions, and we always do pay attention to those things. On the earnings front, didn't have much in earnings. Yesterday we talked about Nike was going to report, and they did report. They had a good quarter. They had better than expected quarterly profits and revenues for their fiscal fourth quarter, which was good. However, they did come out and say, look, there are some things out there in terms of supply chain issues are still giving them a fit, as well as some other disruptions out of China. And so the stock is actually trading down this morning a little over 3%. So Nike right now is scheduled to open up at about $107 a share. So it's trading really down towards its 52-week low, Scotty. Its 52-week low is $103. So yeah, we're within striking distance of that 52-week low for Nike.
All right. Hey, what about the supply chain issues just in general, Philip? What are you hearing? I mean, a few months ago, that was all over the news. That's all you heard is that, boats were backed up on the docks and they just couldn't get them offloaded and all sorts of problems. Is it getting better?
Well, I would say it's somewhat better, but not as much as you and I would like it to be. There's still big battles when it comes to supply chain, mostly because China was having issues again when it came to COVID. They came down and basically locked down whole provinces, and so that slowed down things coming out of China again. And let's face it, Scotty, we get a lot of stuff out of that area. And so when that area shuts down, and when China shuts down, buddy, they shut down. And so I think we're seeing that as a big deal with our supply chain. And I'm not sure exactly when that's going to get fixed, Scotty. I don't think anybody does. Just looking at and reading a couple of different articles, talking to some folks that feel like that we may be already in a recession. The numbers may not actually show it from a technical standpoint yet, but several economists, several money managers, a few other people that I follow are basically saying we're there. The technical numbers may not be presented yet, but from what we can see, we are already in some type of recession. So, take that for what it's worth when we feel that way. But I would throw out a couple of cautions because we are seeing more and more layoffs come across in news articles, and I would caution folks that are still working to make sure you've got some savings, some emergency money there in case layoffs come your way, and that we've got that 3 to 6 month backup of expense money there, so that if by chance you get hit by the layoffs, that you've got some time to weather through some of that, Scotty. Definitely something we want to pay attention to.
Okay.
What
else? Yep, go
ahead. So where are we at now? So we are right now. We've got a much better green picture this morning than what we had yesterday morning. We've got the Dow up about almost 0.5%. That's $133. The S&P 500 is up about 1/3%. That's $13. NASDAQ 100 is up about 0.2%, about $24. So everything is looking pretty green right now. Even on the commodity side, we've got silver up another 0.2%. Gold's flat right now. And the one we don't want to see going up is going up substantially this morning, Scotty, up 1.3%. Crude oil up yesterday. It was about $107 when you and I talked. It's up to $111 a barrel again.
Oh,
going
my
up,
goodness. Really?
Going up substantially. And so, meaning that gas prices will start to tick back up again at this rate. So with that's what we're looking at. We've got more economic news coming out tomorrow and Thursday as we head into the last couple of days of this quarter. But so remember, folks, that there's a lot of things in this world that we can't control. But when it comes to your portfolio, you can control how much risk you have. The issue becomes, Scotty, folks don't realize how much risk they do have or how much they need. That's why we developed our core retirement design to help people through that process and help them design the retirement they always dreamed of. And give us a call at 863-382-0037 to schedule their core retirement design phone consultation. And then they can join us this weekend, Scotty, for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk 730, 95.3 FM.
Outstanding. Thank you, Philip. We'll talk to you tomorrow, buddy.
All right, man. Have a great day.
You too. There's Phillip Statler, Statler Financial Services, 382-0037.
Hey, folks, I hope things are going well for you. Remember, if you need help with your portfolio, you need just a second set of eyes to look at it, give us a call, 863-382-0037. With that, I hope you have a great day. I look forward to speaking to you again tomorrow. Take care. Bye now.